Hi, I am Pratim Ranjan Bose, and you are watching Podcast with Pratim, presented by Iravati Research and Communication Center, or IRCC. In this episode, we will discuss Union Budget 2024, which was presented on July 23. I have with me Shubhendu Moitra. Shubhendu is an investment banker and founder director of Coeus Advisors. He is also a personal friend. Shubhendu, we have seen probably the best possible exercise within the given situation. The global situation is the most dicey in my knowledge. We haven't seen such a situation for many years. And the economic survey ensured that the things are going to be more difficult in the days to come for quite some time. So, in that situation, they made provisions for long-term growth, addressed social expectations, and yet ensured fiscal prudence. What's your quick remark?
Thanks a lot, Pratim. Actually, it's a very interesting and very balanced way of looking into the things. I think this budget FM has tried to do that, to do a balancing act, so that the fiscal prudence has not been compromised at the same time. A lot of path breaking, and I'd say that long-term, reforms have been initiated. I would say, and there is certain things we can discuss in detail later. Certain things which have been maybe first time in this country we are seeing those kind of change in structures, and which will have a long term impact, I believe.
Yeah. Uh, Before we get into that, let me first discuss the most debated topic in the market and among investors, the change in capital gains tax. Uh, Also, there has been a change in the income tax, but in the new regime. Now, it's interesting that already two-thirds of the personal filers have moved to the new regime. To my understanding, that indicates now that the government has given more relaxation on the new regime. It means that they are moving forward to scrap the old regime sooner than any time. This year or next year or which year we don't know, but they will scrap. So overall, how you are looking at the tax part? Just to add that this government introduced the most important tax reforms on the indirect tax part, and they have been after it. So how you are looking at the wholesome? What is your take?
I think, as you very rightly said, that they are trying to simplify the procedures and simplify the structure. There is a shift in the structure, overall structure of the direct taxes. So let's first discuss about the income tax. Income tax, you're very right. We're moving towards the new regime, and it is actually worth to move towards a new regime so that it simplifies it, less number of exemptions, which simplifies the calculations for both the taxpayer as well as the assessor. So that is number one. So we'll see more changes in the new regime than in the old regime. Old regime just being kept intact, and new regime is being tweaked to it so that slowly you shift there. That's number one. Now, coming to the major thing which people are saying, is that capital gains or long-term and short-term capital gains. What is happening in capital gains? We can see again there's a simplification. There are so many types of the structures. Sometimes the 1 year was the short-term, and beyond that were long-term. In some cases 3 years, some cases 2 years. Now they have simplified into two parts of it. One is a short term and long term, one for the debt, one for the equity. Nothing, no more structures. Even for REIT and InvIT also, they have made it as equity. Earlier there was a lot of confusion whether it's a debt or equity, how the short term and long term will be taken. They are treated as 3 years kind of period for the treating as short, long term capital gains. So at the same time, indexation has been taken in certain areas, except only a few of the things. Most of the things indexation has been taken, because indexation is a very complicated structure if you look at it. And the capital against long-term capital has been increased because indexation has been taken out, increased to 12 and a half from 10. That is the main bone of
I think
contention.
in long term, to my understanding, first the tenure has been increased from 6 months to 1 year.
Right.
The definition of long term. And second is that with additional exemption of from 1 lakh to 1.25 lakh.
That was
So
short, small investors. The small investors
so
have been taken care of by that.
so yeah,
Yeah.
so 12. So the rise in long-term capital gains from 10 to 12.5, uh, it's neutralized by the
Yeah.
exemptions
For small investors.
for
But the
small
larger
investors.
investors, for larger investors who are worried, it's actually maybe the right time to do this reform. In the sense, today the market being at the high, you can, think of such reforms. You think about the situation. I mean, unfortunately, suppose in some years when during budget, that the market is at the lower side, it would hit in a very wrong way. Here, because the market was stable and was in a good situation, and overall fiscal position is also good, it's the right time to take such kind of reforms, I would say, and which has been taken. We would have taken this return reform anyway in some day. So I think this was the right time to do it. Simplification of the tax, and I'm sure that we're going to see
So
more simplification.
do you expect the market to get affected because of the rise in short term? Short term capital gains rise has been very sharp from 15 to 20%.
Right.
Uh,
I
ideally,
don't think.
ideally it should reduce the volatility in the market. That is
Yes.
one way to look at it. But
Also the government may be looking to reduce speculation. You might have seen last couple of years, even SEBI chief was said that a lot of speculative investors are entering the market, especially the short term guys who want to have short term gains in a quick way and looking for speculations, and they wanted to cut down on that so that the market volatility can be cut down and can be more stable. So that
right.
is why short term gains has been increased
So
to
no, but the
make
question is,
take care of the
do
speculation.
you expect any impact on the market?
Not on a long term, longish. Even yesterday also, if you seen, initially there was a sharp downturn, but then later on it was recovered more or less. Today also, I don't find much of volatility as of now, and I think on overall terms, and I don't think much of the volatility will be coming, and whatever investor flows are there, that will continue to be there. I
Okay.
believe so.
Okay. So there has been a lot of discussion on capital gains. I mean, we just touched it to ensure the traction
Yeah.
of investors, but let's move to other more important topics, which are
Yes.
important for us. The 2 lakh crore worth of schemes to incentivize industries to recruit people and import skills. There are 5 schemes. Now, first of all, I found a lot of similarity with the US cash handout post-COVID to industries, which pushed up the wage data over there. It's a different matter that it had also pushed up the inflation. Not
Yes.
entirely, but there are other factors also, but it was one of the factors. Now, but the skill part we can't ignore. That's a very good part to incentivize industries to have apprentices. I also think that the government should have treated or they should allow, consider these apprenticeship programs of large industries as dimmed ITIs, because they have a plan or they are revamping ITIs, industrial training institutes. So instead of having them, I mean, let the large corporates run it as an extension. And anyway, so overall, this is a very, very important initiative that has come up. But you can tell me that to what extent it will be applicable, whether there are some missing links or not.
No, I would just there are, as you said, when I was saying there's some path breaking on new kind of initiatives. Certain initiatives, of course, the apprenticeship one that is I'll discuss, and also certain initiative where the government is directly paying for the new employees 1 month salary or some 3 4 years of contribution to the EPFO. This is first time happening, I think, in this country. This is a developed countries. This is a very normal. It happens to boost the employment, and this time government wanted to boost the employment generation. This is a very, very important point of it. So I want to say, and that's something we'll see in future. And I think it's good that it has come in one way or the other, and this is a tool which is being used for the first time. Coming to the internship, you have seen last couple of years we are saying that we have a lot of educated guys, but they are not employable. I think we are seeing in
To
various
add,
places.
economic survey pointed
Yes.
out that around 51% people of the youth are employable.
Yes. So basically, how do you make them employable? And who gives them the employability option? Because I'll tell you this, for them to get the first job, first employment, first field of the employment is very, very important. You look for general things of the normal internship. Forget this kind of internship for everybody. Even an engineering internship, so many colleges today. Even a management internship, so many colleges today. It's difficult. It was in when I studied my engineering, it was not difficult. You could get the internship. Now it's very difficult. They all parents or the teachers, they run here helter skelter to get internship. So basically, to give them a feel of the working atmosphere, it is a good I would
I
say
think
the
I think it's more than that. I think it's more than that. I'm telling you, long ago in my student days, so in Jadavpur, there was this annual feast called Sanskriti, and industrialists used to come. So I'm not taking name, but one such CEO was very significant in those days. So he came and basically bashed the university education. He said that I don't care for your degrees.
exact.
You know,
So that
you don't give
employability,
me products to recruit. I have to train them to be employable. So I don't care
exactly.
what you are doing with your university. I am only taking that as a graduation degree and giving them doing.
No,
So I
that
believe
that
it
that
is something more than that. It is bridging the huge gap we have between the academics and the industry.
Yes, and giving them the first opportunity to work for at least a year in all large 500 companies which you are talking about, a crore number, which is quite substantial, and it's not also pinch, it would not also pinch the those companies. It will be benefiting them. It's a
The
win-win for everyone.
government is giving incentives for that.
Exactly, and also CSR. It will be part of the CSR that fits it.
It's
Which the
part of
first
the
six
CSR.
thousand, yeah, it will be part of the CSR.
It's
So
far
which is
better. It's far better than the fictitious number of tubers that
yeah.
they show as CSR.
Exactly. So it's a good way of using CSR, I would say, and that's a very very new and good initiative, I would say. And also in addition to that, I think we discussed in recent times about the education loan, high cost education loan. So for the students, this education loan, the 3% subsidy up to 10 lakhs for domestic higher
That's
studies,
a very good intervention
very
because
good. I mean, in
I
fact, we
think
were
we were
discussing.
discussing at a
Yes,
TV studio the other day
some other
about
forum.
costly
Yes,
education loans.
absolutely. Someone said that why it's so expensive. I said it's a risky, so expensive. So who will intervene? I said only government can intervene. So that's what happened. Government has intervened as a 3%. I'll give and they'll give a voucher. So it's very simple and easy
This is
way of
exactly what they did after the COVID or during the COVID with MSMEs. Government came
exactly.
out with the intervention to give the guaranteed credit. So it is also a guaranteed credit formula.
So one is the guaranteed credit, and the first one is guaranteed credit. That's 25,000 up people up to 7.5 lakhs. 10 lakhs is actually the subsidy, 3% intervention. They said. So you get 10 lakhs. You're given a voucher. With that voucher, you give it to the bank. So bank get 3% from the government. Balance you pay. So whatever interest is decided, say 11%. So you pay 8. Bank pays. Government pays 3. Like that. So it's an interesting and very good interventions, which is so this budget, I think, has looked into this employability and
I think
employment.
we should also add here that we could come out with such force because of the digitization program that we have and the identification program, which is very, very necessary.
Is
So,
absolutely, absolutely in
uh,
all spheres. Not only this, we can discuss in other spheres also. Digitization is going to be used in a big way, like land reforms and
yeah,
all, which is
because after all, the banks also need some kind of assurance that the borrower is not going to run away.
exactly like and this is for domestic education. So I think it's good. It will help the country as such. In fact, international education. I mean, why should a country fund such thing
Indians
unless.
spend billions of dollars, some 5 billion or so in education
Right.
abroad. So,
Yes.
so even if
Unless
we,
I don't have certain qualities of education, then, but I think in India we have mostly good quality education, and internationally it is accepted. I mean, whether, a lot of people say that our universities are not in top 100 and all, that may be the fact, but in their criteria, but our education is good, which is accepted even by the US, I mean, or any other advanced countries, that when our
so where it
GCE.
comes down is that the tech education is going to get a boost.
Absolutely, absolutely.
Okay. Uh, Very interesting. The multifaceted impacts of one stroke. Then let me again come to another very good decision that has been taken. It might take some time to implement the land Aadhaar, Bhu Aadhaar, or GIS, GPS-based land identification program.
Right, right.
Now, in this country, the bulk of the cases in civil court are on dispute over land. And most of the disputes and most of the delays in land acquisition for industry or for infrastructure are due to disputes in land acquisition and disputes in compensation. Who will get the compensation? Ultimately, that is where it boils down. So, how do you look at this?
No, actually, this is a very interesting. Not only they're talking about digitization of the land records, and also not only for village or the agricultural, but even
Urban
for the
also.
urban also they have said, and which will start, clear a lot of issues, especially land acquisitions for whatever purpose, as also, using, helping those particular farmers, because they're tagging the farmers with the land. There's a point of the which talks about the farmers with the tag with the land. So who is the owning farmer and who is actually the farming farmer? They all will be tagged. So whenever government wants to support a particular group or particular guy, it is very
It
quick.
will have tremendous impact. So while we're coming to, if we just look at it very closely, again, if we, there was also a proposal for labor data consolidation, right?
Yes.
So if we look at it very closely, this government from the very beginning, it was working on direct benefit.
Yes.
They were plugging all those loopholes of
Yeah. So that the leakages are reduced. So
so
earlier, that was a main problem.
So when you were saying that when the farmer data is linked, so the farmer data linked means, a lot of issues that we keep talking about or just go up, like farm distress or this or that, the government will have more authentic data on what is happening where.
Absolutely, because see, the not only that, whoever having what kind of land, what kind of subsidy or what kind of fertilizer they require, you can link a lot of things with that. What kind of support will be required, what kind of, like yesterday somebody was saying that, a lot of farmers were not aware what they should sow, because they're not knowledgeable enough in certain areas. Like someone says that in certain year there was some drought, so all the farmers next year went for some kind of rice or paddy, which is not sellable locally, because they said that that is easier to, and so ultimately they lost. So they need to be guided, or they need to be given guidance. So it will help us in doing the guidance in a very focused way
Policy
than maybe
interventions will be more focused.
much easier and focused.
Right, right. Now let me move to another area, startup and technology.
Yeah.
In startup, the angel tax has been removed. Do you think it will be a big boost? And secondly, when I look at this 1,000 crore VC funding in space technology, you are dealing with these VC fundings and etc. every day, so you can tell us how critical is this. But I only know that India is expecting to build $100 billion industry on space going forward. And it can be. We see Elon Musk is
Yeah.
uh,
In fact,
the government has
you are
also invited private sector that's very path breaking in small modular
nuclear.
reactors or small reactors. So there's an R&D. So over to you.
No, so basically, as you very rightly said, that this particular, first of all, the angel tax which was actually hurting the startups, that has been withdrawn, which is
I
a
think
very good
startups
one
are going
for.
to Singapore or some other place for.
Yes, there are a lot of cumbersome process of raising money, because it was like this, that earlier, whenever the initially somebody sets up something and then he raises money outside, then there are two parts of it. One is, a lot of times this money from VCs come in a structured way. Partly is equity, part is debt. Number one. Number two, so what the government or the tax authority was saying. So this is an income to you. You are getting something which was at 10 rupees, you are getting at 20 rupees or 30 rupees. You pay tax today. So whatever the money was coming for the business, you have to pay first tax, which was not actually very efficient. So they had to take very circuitous routes and all. So that has been very rightly been withdrawn to boost the startups. That's number one. On the space, now space, as you know, we are one of the cheapest space. We have the technology to
Space
anything
travel.
cheapest,
Let me put it this.
spacecraft or anything related to space. So we need to add more in, more
We have
I'll say
four, five
innovation.
startups already in space.
Yes, yes. So, support those innovations. And unfortunately, space is something you will not get a normal VC to fund it. So the government is setting up this fund to start this process of funding such kind of startups. Wherever they gets effect on, the ecosystem starts working, there'll be investors already there. Excuse me. So basically they're trying to start this innovation in the space by helping the startups in the space sector, which is a very very good way to boost that sector, I would say. As you know that ISRO has already formed a company, a private company, to do the space business, because otherwise ISRO was only our R&D and our space authority. They are doing it for others also, but not in a structured way. Now as a business, they have formed a company last year, which is going so that they want to earn out of it, and they can actually see that how this earning and other things like that be used as a corporatized way as such. On the third thing of the small nuclear reactors, and having a private joint venture for that by the government, or take the help of the private sector, is again a very path-breaking. So basically, defense already a lot of private sector is working, but nuclear was a one of the last few bastions, I'd say, where it was still a government's own area. So slowly they're coming out of that, and I'm sure that'll make the things much more cheaper, much more wider, and good for the industry and the country as a whole.
Now, uh, there are some interesting politics, etc. I'm coming to that. The interim budget, let me talk to the fiscal side of the story. The interim budget pegged the fiscal deposit at 5.1%, and the full budget pegged it at 4.9%. So, and the government has reduced its borrowing targets. This has many pitfalls. You can tell me, I saw one story in some paper that the corporate borrowing will be easier. I mean, simple reason, if the government crowds it out, the market, then the interest rate goes up. So kind of that. And so I'm sure it will have wider significance, which you can tell. And so where is the trick? I mean, how the government is managing this? I mean,
So if
spending
you
and
just
as well as ensuring the fiscal prudence.
Yeah, it's a very simple thing. If you look at when the interim budget came and what happened in between, just after that. So the RBI declared a 2.11 lakh crores of the dividend. So interim budget didn't take this thing of that. Now, if you see the overall expenditure in the interim budget and the current budget, is interim budget, it was 47 lakh 60 some thousand, 62,000 or something, was the overall total expenditure. And in this budget is 48 lakhs 20,000 or 25,000 something. So basically there's a 60,000 increase in expenditure interim to this current budget. But at the same time, government has 2.11 lakh crores of the dividend. So that money have been used to reduce the, first of all, fundraising requirement of the government, and secondly the fiscal deficit for the current year. by another 20 basis.
So put it simply, a small part went straight to capex, not into any
Yes,
unplanned expenditure.
absolutely. Yeah,
And the
absolutely.
bulk of it is straight away to bring down the fiscal deficit of the government.
Yeah, the gap, the loss, the gap of the government funding. Yes,
Right.
and
So
as
which
you
will no, here I'm addressing this point because a lot of people, there are people who will say that it's easy, they are taking the dividend. RBI, if they hadn't, then the RBI would have been richer, kind of stuff. But what I understand, if the fiscal deficit is low, then it is better for the money managers to manage the economy, because ultimately they have to balance the economy.
So the first of all, fiscal deficit is a very important part for the rating, sovereign rating of our country. Now, once you reduce it to the countries international, I mean developed countries level, say their target is to make it 4.5 in the next year. So what happens? Your rating goes up. As soon as your rating goes up, the government borrows internationally at a much lower cost. So your cost comes down. So it has a different effect. Your overall country's situation goes up. So it is going to help us in that way.
I
So
think we
and
discussed this
secondly, once
topic.
you
I think we discussed this topic
yes,
once
sometime back,
on this platform
maybe a couple
on
of months back.
sorry.
Maybe a couple of months back, we discussed this topic on this
The year was included
bond
in
bond index,
bond index.
international bond index, when Indian bonds, sovereign bonds were included.
Right,
So,
right,
so
right.
that has started also. So basically, if you see the when the government borrowing also has come down this year, you will see the even because government borrowing cost will come down short term. At the same time, international so our domestic companies also can borrow lower because all pegged to the government borrowing cost. So ultimately, everybody's cost comes down, country's cost comes down. So our economy or the company starts improving their operations or become more competitive in the international market. So
Competitive.
that is the implications of that.
Correct, correct. Uh, on the political side, a lot of people are saying why they are giving, that is a political debate about Bihar and Andhra Pradesh. Now, Andhra Pradesh was seriously a case, and it is going to Amravati. It was stalled by the previous government, and Amravati is infrastructure. So there will be growth multiplier on that. And Bihar is something we need it. It is going for tourism, it is going for infrastructure. If
Yeah.
this 30 Bihar, West Bengal, and UP are basically the reasons for low per capita income of this country. If exclude this 30%, they form 30% of India's population, exclude them out, and you will see India's per capita GDP at middle income level.
Right.
So,
Right.
so you have to improve their rate. And it's good if, to my understanding, Chandrababu Naidu is extremely pro-development. So
Yeah, yes, he has shown good things in Hyderabad earlier. We have
he made
seen.
Hyderabad an IT city. So
Yeah,
we
yeah.
need more states which are competing for industry, because in that case, we won't see repetition of, if the industry remains concentrated in 5, 6 states, then we will see problems. We are seeing problems in Tamil Nadu. We are seeing problems in Karnataka. Okay, that gives them
You,
huge
you might have
power.
you might have seen when the Karnataka recently came with a very
Exactly.
controversial thing. The Mr. Chandrababu Naidu said, "You come to our state. We will give you space without any restriction." So there should be such competitions like that.
Exactly.
Should
We
be.
need more Andhra Pradesh's, Odisha, and many other states competing for industry. In that case, this hegemony of couple of states will go.
Yeah, and it will be market will be much more open, and there'll be much more I
Costs
would
will
say the
come down also.
industry cost will come down. Industrialists will be more having more options how to work on that their projects.
Right, right. So, one good thing to my understanding also happened is that they have increased the NPS contribution. Uh, so
Right.
that will take a lot of debate out of that old pension scheme. That is a political demand anyway. The pension reforms should continue. Now, the last
Absolutely.
last side point on the revenue side, how will the government manage so much of revenues? I'm saying this because there are a couple of problems. We have discussed on this forum that we are yet to create the ground for foreign investors to invest in our infrastructure. We don't have private sector over here doesn't invest in infrastructure. Even the private banks don't lend money. So it is all infrastructure is all government funded, and we have stepped up on that. We also increased social funding. Now the taxes are not increased; it is getting rationalized. The the foreign corporate tax is reduced, very rightly so, and all things we discussed. So the economy will take time to broad base. That's another side in the long run. But in the short run, how will the government manage the revenue side? Disinvestment, the Modi government has very poor track record. So over to you.
Coming to your disinvestment thing, I think we discussed earlier also on that. Disinvestment, actually, the track record has been very bad. Whatever initially was targeted, not, except the Air India, nothing could have happened, and maybe the IDBI Bank will happen. And the current scenario, current political structure, I don't think disinvestment government also realizes it's not easy. So they have a lot of ambitions, but those are, even they are talking about the unbundling of DVC, privatizing part of it. But I think it's difficult. DVC Act has to be repealed in the Parliament, and there are so many other state governments also are involved, so it's difficult things are there. So having said that, one good thing what you have seen, that FDI, the finance minister has advised that they will allow, they will try to see how the rupee can be used. This is a very interesting way
Yeah,
of
that's a topic I actually forgot to bring up.
absolutely interesting. You see the how the money will come. So there are several countries. You see, first we discussed that you can always get investment from other country, outside countries, in foreign currency. Now that is the thing, that foreign currency risk, other things are there. But there's several countries where if you can have a rupee kind, and there that currency is transactions, and if that country has a surplus, I mean they are having more export to our country than the import, then we will have a lot of rupee available in the country, which is actually owned by that country within our country. Now, whether that can be invested in a country, because today several international countries are interested in investing in India. So instead of bringing their own money, whatever is their surplus in our country, if that can be invested in
I mean,
rupee,
not
that
entirely.
is
If a part of it,
partially,
it
partially.
has a link to de-dollarization program also. Our
Exactly.
dependence on dollar will reduce. So
Not
the
only that, our dependence on dollar will reduce. Number two, our this kind of, even if I do a borrowing from that, it will be a rupee borrowing, which will be much easier borrowing than a foreign currency borrowing. Had they taken money in their country and then we have borrowed, would have borrowed in international currency with the hedging and international risk and other. This will be much more easier. So this is one reform is there. Other revenue generation things which the government is actually expecting, that with whatever boost they are giving to the industry and agriculture and others, there'll be more generation of the GSTs and other things. That's what I think they're targeting, and that revenue should come back to the system.
I
We have to
think they are
see how.
also targeting that monetization of
Yeah,
assets. That's
monetization, that is that can happen, that is continuing. I think that's, you were very right. Instead of the divestment, they're looking more for the monetizations through InvITs. And if
so.
you see the InvITs and REIT, they have also made a very significant change in this budget. Earlier they have last till now, it was 3 years period was required to be hold for make it a long term capital gains. So now they have reduced to 1 year in under this simplification.